Hello and welcome to another update video about gold. Looking at the gold futures chart here, still doesn't seem to be finished with its overall correction here. I've said it for many weeks that the 1920 level is the level that if broken, I would have to turn bearish on gold. But we are not there yet. We are currently again in support. Or still in support. We've rallied a few times out of this support area. Last time was this high B wave that we have on the chart. I can count this also in a different way. I can put the wave 1 here and then have an A wave, a B wave and a C wave, but it doesn't really make a great difference. It would rather shift this support area a little bit higher. However, I'd rather give it a bit more space. We still have this sort of lasting low in place on June 23rd. And as long as we are holding that anyway, this 1-2 setup is formally not even invalidated. But normally after it breaks below the 78.6 Fibonacci retracement level, I typically would rather say this scenario is not going to work to turn out. We can also take a look at a potential bearish scenario, of course. But as long as we're holding bullish support, I'm typically bullish, especially when we talk about gold and silver. I've been charting these for many years, not always on YouTube, but I can tell you that it is just the case that whenever they really go, they are really bullish. And it's typically very hard then to find another position like we had it here. Yeah, it turned around in our trend reversal area and rallied really aggressively. And therefore, I rather give it the benefit of the doubt. And I would rather, I would not want to turn bearish, prematurely, basically. So I'd rather give it the benefit of the doubt that it can turn bullish. And if not, then stop out and rather try to find an entry lower. This is typically, in my opinion, how this market should ideally be approached. I mean, if we want to talk about a bearish scenario, this would be high level. We can talk about that much more below 1920, but even then I would still prefer an overall bullish scenario because at the moment I'm counting this as a potential 1-2-1-2 setup. Now there are plenty of bullish scenarios left. For example, we have on this chart at the moment a 1-2-1-2 and a potential 1-2 setup. We've captured, as you will remember, and if you've been following this channel, we've captured this trend reversal area. We've captured this one. I've just deleted all these support boxes. We've captured this one down there as well. So plenty of good entries for anybody who wanted to trade the metals. Now it's all about, okay, ideally it's going to capture this one. Okay, if not, then we have to readjust lower. That's just the nature of this market. Corrections often take a long time, but when it goes quickly. Yeah, that's why I rather am positioned on the bullish side, especially as we had plenty of good potential entry points lower. So we have a lot of, potential space, you could say. But even if this 1920 level breaks to the downside, I mean, I could still argue that we have here a 1-2 and a 1, and then this may be an A wave, a B wave, and a C wave, and then it could go somewhere from there. Okay, so there are plenty of scenarios left. I would not really want to turn bearish on this market. It's typically not the best way to approach it unless it really gives us strong evidence. Yeah, I mean, what would be a bearish count? It would be here that we say this move down was only the first wave of a correction down into the October 22 lows. Then we had here a 3-wave move to the upside, maybe an A wave down, maybe a B wave up, and this is now some kind of a C wave in a 1-2, and then here follow through to the downside. So if it would really follow through impulsively to the downside, then we have to turn bearish on this one. But why, if we're holding bullish support levels, and why if we had impulses to the upside, and why if we know that if the metal market goes, it really goes aggressively. Just note that obviously that's why we do risk management. That's why we have these support levels on the chart, to know that we have to readjust if price breaks below the relevant 78.6 Fibonacci retracement levels. So at the moment, I would still focus on higher. I mean, that could be wrong, of course, but in my opinion and experience, it's typically the best way how to approach this market. I mean, you can have a different opinion, but it is what it is. I've seen it many times. They turn around quite quickly. And especially as that's why we use these trend reversal areas to find potential entries that are very close to the relevant pivot points, and if they break, then we can just stop out and readjust lower. Okay, So at the moment, we are still here in a situation where we have a potential 5-wave move up and A, B, C, as I said, and I haven't got a confirmation yet that this low is in very clearly. So this could still drop lower. Next support 1935, then 1920. Below that level, I would go to the next higher degree and would assume that probably this wave 2 was never finished. And then we look for support areas lower. Looking at the indicators, I mean, it is now fairly oversold on the 4-hour chart. You can see that here on the RSI, it pretty much came down to 30. Looking at the daily chart, here is still space for it to drop lower. It doesn't mean it has to go down all the way. I mean, you can see it turned around here as well. That was in June. It rallied quite significantly. Didn't really give us any strong evidence that it was an impulse, but at least a diagonal structure. And it also rallied out of our support area again. So it's all looking good so far. And it hasn't broken actually any scenario so far. So it's all still looking good. But I'm watching very closely that 1920 level, highlighting surely it could break it. So I think short term we have to remain focused on the downside because it hasn't given us any indication or confirmation that the lasting low is in. But it is again the area where we're looking for a low, the same way as it produced a low here end of July. Okay, so ideally a C wave goes below the low of the A wave anyway. And we've got 1935 and 1919, 1920 as support. That's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.